Welcome to Business Bytes. I am Neo Maruatona. The JSE ended the day flat to the positive on 31,403 points. We spoke to Sean Stockett from Stanlip looking at NAMPEC results.
Of numbers, if you ignore revenue line for a minute and you just look in the operating margin increased quite phenomenally as well. A lot of restructuring going on within the business, as we saw Andrew Marshall say there. And also a lot of free cash flow has been released now, so it could increase the dividend by almost 100%. So a strong set of results. I suppose now the trick is with all the restructuring and that sort of behind them is now to get that revenue line to grow going forward. But you know, the multiple unwinds quite quickly. I think it was on a 20 times multiple prior to the set of results, which falls down to 13 times. And if they can continue on this road, then that's not excessively priced going forward.
Today, the NEC 20 was down by 0.3% at 24,880 points. We spoke to Tosin Oluwakiyesi from Vetiva Capital Management looking at CCN results.
Major concerns about CCN is actually it's the lack of clarity regarding its expansion plans. CCN currently has a production capacity of 500,000 tons. That's the lowest in the cement in the industry. A lot has been said about the huge potential for growth in the cement industry. But of course, we have always maintained that potential will be driven by volume and not so much by prices as it has been historically.
The NEC 20 closed flat to the negative on 4,577 points. We spoke to Henry Chege from ABC Capital looking at the shilling.
Well, I think I echo your sentiment on that regard, because looking at what, the revision of the rating by the S&P, it gives Kenya the limelight, it deserves. So going forward, what we do expect in the market is that you are likely to see the Kenyan shilling appreciate to the dollar, and I think the CBK would again come in and intervene at a certain level.
For more news and videos, go to abndigital.com.